Test. Hope you're all doing good. Good morning, everyone. It is March 5th, and in today's session, what we got cooking is we'll talk about China GDP targets. We'll talk about Jerome Powell. Jerome Powell coming on the wire tomorrow, and the most recent market movement. Some indicators that we can watch, internals, different stocks that might give us an idea of where this market kind of wants to place. So we look at China's National People's Congress, right? The annual gathering that sets stage today, where the nation's rubber stamp parliament sets economic priorities for the upcoming year. A GDP growth target of around 5% was announced, with a CPI of about 3%, as well as an employment rate of 5.5%, as the country aims to create more than 12 million new urban jobs. And while the bold growth goal was at the same level in 2023, there are additional headwinds to consider this time around, including domestic demand and deflation worries, a property crisis, as well as demographic challenges and a stock market rout. You can see here the Hang Seng. What was the other one? The CS 100. Maybe it wasn't the. What was it? What was it called? CIS. Now I'm gonna be looking for this forever. Anyways, let's just take a look at. Even if we look at just the Hang Seng for now, I clearly forgot, but we've had a massive downturn ever since we kind of peaked out in 2018, right? There was a nice little peak here in 2021 before this downside leg. And last year, it's not like anything really changed. We had this most recent pop off some of these lows over the past few weeks, but that's kind of been garnished, and we're starting to see a little more downside to this move. It's not that easy to realize targets. It's what Premier Li Jiang, I think, told the nearly 3,000 delegates at the Great Hall of the People in Beijing. We need policy to support the joint efforts on all fronts. So how does the world's second largest economy plan to make them happen, right? Especially with higher base number comparisons. While the Premier's traditional press conference was scrapped this year, there was reference to policies supporting childbirth, stabilization, housing projects, harnessing new productive forces for the industrial capacity, and more importantly, China will lift all foreign investment restrictions in the manufacturing sector and pull together strategic scientific strength and non-government innovation resources to make breakthroughs in core technologies in key fields. Contrary to some expectations, no stimulus bazooka was unveiled at the gathering, but a government work report revealed plans to issue 1 trillion yuan, which is the equivalent of about $140 billion, in an ultra-long special bond for major projects not included in the budget. So there's naturally rising competitions that are floating around. China named some of the specific industries for innovation, including new energy cars and new material, and pointed to development plans for quantum computing, big data, and artificial intelligence. It's a part of self-sufficient driving that saw the central economy spend 3.3 trillion yuan, or about $420 billion on research last year, or about 2.6% of the total GDP. The US has been playing a similar game with CHIPS and Science Act and the Inflation Reduction Act, which both pumped hundreds of billions of dollars into key industries in the name of national security, competitive advantage, as well as restricting high-tech chips to China and imposing serious export bans. Remember what Elon said about the electric vehicle car manufacturing space, where if China had lifted restrictions right to the US and that market was allowed to be infiltrated, if you will, by China, there'd be a lot of trouble in the EV game in America. So as we were talking about Tesla and Elon has officially been dethroned as the globe's richest person by Amazon founder Jeff Bezos. It comes after Tesla slumped nearly, or over, I should say, 7% on Monday, right? A significant downturn in this name. I don't know what's going on here. A fairly significant downturn realistically in Tesla. I wanted to see if we can actually hold around that 200. That was very easily disrupted on Monday as we start coming back into some of these areas. So there was shipments from the Shanghai factory dropping to their lowest over a year, as well as price cuts and discounts, while the Magnificent Seven stocks helped push the U.S. stock market to a new record high. So, what is this? 111 days. So Tesla, along with Apple, right, the two main, well, I wouldn't say two main constituents, but Apple is a huge constituent in the market, being the second largest market cap. We've seen the downside pressure, and you can see Tesla's gapping even lower right now. Apple yesterday got a push lower. We're now gapping even lower into that 171 area. We start losing this 170, realistically 163 becomes a target, and it begs the question, right? Is Apple kind of a leading force in what's to come with the overall market? As we've seen, not many other Magnificent Sevens other than, I guess, Tesla and Google most recently are down. But Apple here is showing a very strong divergence in relation to some of these other big names. A lot of this upside, right, held up by NVIDIA, but held up by, by the AI space and that general quote-unquote bubble, if you will. But realistically, what's happening right now, we're seeing downside in one of the second largest stock in terms of the market cap that could potentially have a very big divergence in the names, because realistically it is one name, right? If we continue to hold the bull side and upside momentum in terms of the Magnificent Seven for the rest of them, that can diverge, right, from the overall market movement. We can have Apple kind of slumping while we see the rest of the market sustaining the upside. This is why that I think that Apple becomes a decent dip buying opportunity for the next week or two as the market looks to extend some of these gains before topping out. Have we necessarily topped out, right? Is this the top? I don't necessarily think so, but we're starting to form something of the sort with these larger divergences that are kind of plaguing in this market. Now, one other thing to mention today is that we have Jerome Powell coming on the wire, right? He's going to be testifying tomorrow and on Thursday, so it's not today. We're going to see the semi-annual monetary policy report before the House Financial Services Committee in Washington, D.C., and we'll see how that shapes up over the 2-day period, right? Is there going to be more of a hawkish tone? Is monetary policy going to be one of the main things that's talked about? Realistically, we're going to most likely see a lot of talk about inflation and go from there. And if this isn't, right, the final leg up in the market and Jerome Powell doesn't help prop things up from a more dovish perspective, I would say, talking about, well, maybe we shouldn't say necessarily dovish, because remember, if we start talking about rate cuts and sooner rate cuts, more aggressive rate cuts, the market's going to feel that. We're going to feel some turbulence to the downside. So if Jerome Powell takes more of a neutral tone and kind of talks about inflation being kind of subdued or in the areas that they want them to see, and there's no rush to cut rates, realistically that's going to help prop the market up to another extension to the upside. So these are going to be very important events that we're going to see starting at 10 a.m. Eastern tomorrow and on Thursday. If I'm not mistaken, it might be the same time. So those are going to be the next real big market movers, which right now we saw that yesterday, starting Monday, markets were extremely slow, not volatile at all. And then into the end of the day, we got a nice sell. Then overnight, we see this massive sell that's shaping up. In other news in terms of that, we also have the futures rollover, right? The contract rollover, which is set to take place in a few weeks. So we might see split hands, right? Contracts trading on the M rather than on the current H. So the volatility and volume is going to be a little subdued based on that as well. So those are going to be the main things that I'm going to be looking for this week. We'll keep eyes on Jerome Powell because that's going to be the main topic of conversation. That's going to be the main thing that a lot of investors and traders alike are going to be waiting for. And with that, I think that today might be a slower day. You've seen that the S&P right now has toppled over a decent bit from yesterday's drop, right? We saw that we peaked around that 51.55 area, new all-time high, and then into the end of the day, we dumped back under that mid-30 that created this little distribution block. So what's happening right now, I wouldn't necessarily go crazy on the bear side, because what the market's done is we've pulled back into the prior distribution top. What this tells me is this is a decent area to start looking for some of these longs, around the 51.15 or so. I wanted to see 5120s hold. That didn't necessarily shape up. So the 5115 area, maybe a bit lower, that's the region that I want to see these final longs to get an exaggerated move back into those 30s and then see kind of what manifests there. If we get continuous selling and aggression against that mid 30, right, I'm going to start flipping a little more to the bear side. But currently we're in a situation where we've pulled back to hold the imbalance in the S&P 500. So I want to see and explore that potential to see if we can get a spring back up. Otherwise, if we start opening under 5110, which again is a possibility, I guess, within the next 20 minutes or so, we can potentially see some more downside. But right now, I'm still holding out for some kind of bullish momentum to start off the day after this larger overnight drop. So keeping that in mind, let's open up our live trading room. Let's see what we got cooking in terms of trades from there. I have a slight lean to the bull side to start the session off, with the understanding that we might have a slower day yet again, as Jerome Powell is set to testify tomorrow, right at 10 a.m. Eastern time. So check out our live trading room, TradeProAcademy.com, and I'll see you guys there. We'll do this again tomorrow and the rest of the week. On Friday, keep in mind we're going to have we're going to be streaming live. We're going to be streaming on Thursday as well.